Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. We are Friday, TGIF. Da-na-na-na-na-na-na. It is the 6th of December. Let's make sure YouTube's working. I guess I should have waited for that. Yeah, that's good. All right. Big econs out of the States today. You could really see the whole market was sort of moving towards that event. If we look at our risk on, risk off, actually, you should be able to look at this image and go, oh, okay, I pretty much know exactly how the econs went. Clearly, risk on is back on, and we spend lots of time in the daily brief talking a little bit about certain politicians finessing stock prices maybe a little bit recently. But also, too, we talked about the fact that there's a really, really big initial public offering by basically the state-owned oil industry in Saudi Arabia, Saudi Aramco. And I believe that they'd like to keep the market up if they could up into that event. So I think oil's being propped up and energy's being propped up a little bit artificially right now. And gee whiz, Bitcoin's even caught a little bit of a bid here. Is our risk on, risk off thesis that Bitcoin and crypto is part of the risk on universe correct? I don't know. I mean, clearly after that backed event, there was just an absolute meltdown in Bitcoin and a big disconnect. But, I'll keep an eye on this. It's interesting to see. As I said earlier, economic reports came out today showing that the U.S. economy's in pretty good shape. The jobs number came in pretty strong. As well, the following reports on consumer sentiment showed that they're pretty happy. So on balance, probably going to be a pretty good Christmas. And I even put out tweets earlier today sort of talking about how I feel as though because Saturn Pluto cross, Saturn Jupiter cross, huge historical events happen on planet Earth around these things. I'm still jury's still out about Saturn Pluto. I don't quite understand that, but I can completely understand when the two biggest orbs in our solar system cross paths aside from the sun. Pretty big things happen sort of in our solar systems, psychologically for us little humans on Earth. And it's a great study. If you want to take some time, go back and look at Jupiter-Saturn crosses and just look what markets do. It's quite shocking, really. But, Pluto-Saturn cross, end of one financial era, beginning of another, I do find it fascinating, and I sort of put tweets out to the effect that, crypto kids basically just went through almost exactly 1 year bear market. I mean, like literally, it was almost exactly 1 year. And I find it fascinating that literally the market pivoted last Christmas for the stock market, and in essence has basically just been going straight up. And my hunch is that we're going to pivot on this year's Christmas event. We'll see what happens. Only time will tell. But just a fascinating conversation about like WD GAN and long-term cycles. We also spent a lot of time in the Daily Brief talking about things like interest rate cycles and how, we were sort of commenting that I think if you look back in history, the day that the OK Boomer sort of meme took hold was in essence the day of the sort of generational transition from boomers to millennials. There's a lot of that going on right now. Celestial crosses, generational crosses, interest rate pivots. It is an exciting time to live in, that's for sure. With regard to our conversation here today, we sort of talked a little bit about this sort of mini trading range that the U.S. dollar's been in of late on that relatively robust jobs number out of the States, implying that the U.S. Can justify their higher interest rates than the rest of the world. U.S. dollar index rallied back smartly here today. I would have thought, to be honest with you, that they would have washed these stops, but maybe just washing these stops was enough for them. So there's always a danger of taking a trade or assuming anything into these big econs, because you can have this kind of event where you get this massive kickback rally. What's most interesting, of course, is risk on. You can see crude oil has broken higher, and it was just fantastic to hear that my cohort who helps drive the bus here, the Duke of Albuquerque, is still long his oil, kicking butt. He said there was no reason for him to change his trade and his setup, and he's still enjoying that nice rally. So way to go, Kevin. And of course, here we are, stocks. We talked about this recently. That V-top itself was not enough to justify an actual sell, and sure enough, here we are, right back up at the top of the damn range here. I'll leave the conversation about shorting stock markets for now. I'm not quite ready just yet, and my hunch is, like I said, I'm thinking that they want to rally the market into Christmas here. The risk off proxies obviously took a big punch in the nose here today. We had inside bar failures on things like the bonds. I think I've told you guys, but I spent a lot of time in the daily brief today, of course, talking about the fact that I still am looking for the bond market to go quite a bit lower, i.e. interest rates to go higher here. So I still have my put on, and I'm not touching this thing until I see 130 on these things. So, and you can see that chart. What is interesting here is to actually see the Japanese yen moving up. That actually surprised me a little bit on the other side of this trend line. But probably the most interesting of all these conversations is the gold market, in that we've had, a trend line break. Our rule is we want a 100W on the other side of the trend line break. We also have this cool little channel that developed here, and notice the midpoint of the channel stopped the bull along with 38.2s. So now is actually when I was telling people on the daily brief today, now is when we really want to laser beam focus in on these gold and gold stocks and stuff. And if we can get some sort of action along these kind of lines, that's a monstrous buy signal, but it isn't in just yet. What I did find fascinating, of course, is we've been watching things like Newmont, all pissed off that they're not the biggest gold stock in the world. He's up on the day. Wait a minute, that's not supposed to happen. And I think that really Newmont wants their number one biggest gold stock in the world title back, and I think they're going to take them up here. Do I have a trade right now? No. I'd like to see a nice W come in now on the other side of this trend line. I might just take that buy. And then, of course, we talked about the biggest gold stock in the world. Barrick has actually broken out of its downtrend. It has W'd, and it's actually just doing nothing more than just backfilling this gap. So we'll keep a close eye on these guys. It appears that they're heading higher here, and it appears that he's up a bit on from his open, but down on the day. He's up on the day. And I noticed like little stocks that I'm interested in. I picked up a little bit of this ALO, and with the gold coming off as hard as it is, interesting to see what this is the U.S. stocks. Sorry, I bought it in Canada. Well, they're coming for me. That's Kevin saying, "You're talking too much, Brian. Get moving." I don't know whether you guys can hear that or not. Anyway, picked this up at like 81. Just bought the key reversal level, and here we are at 84. Whoa, wait, gee whiz. I don't know whether you can hear that, but... So anyway, the point of the matter here is that it's just interesting to see that even though gold itself is down smartly on the day, a lot of the gold stocks themselves are not. So keeping a close eye, and like I said, ironically enough, traders got to trade. Look at these candle body low levels, trend lines. We got trend line confluence, 78.6. That is a really interesting level gold's coming into here. All right, so that's sort of your risk on, risk off kind of conversations. We'll see how this goes. I mean, the jury's still not out here as to whether these things have actually bottomed, but I do kind of like the look of what's happening in the gold stocks themselves right now. New ideas and face plants under the heading of. And actually yesterday I showed you, I think I showed you like EXPR. We sold that at a nice profit yesterday, so I was pretty happy about that. Here's a new idea. I'm not quite sure why I have the Kirk still on here, but maybe it's just to remind me, I should talk about this with you guys if I didn't yesterday. But here's a name that I'm very interested in right now, AR, from both our TRI SOF perspective, but also from just buying the stock. you can clearly see where the W level is here. And again, it's another energy related name: buy when it snows, sell when it goes, that kind of thing. We'll probably be in there buying and doing some shopping here today. If not for TRISOFs, then definitely for myself. And I noticed a few of my other energy stocks that I picked up here recently are doing pretty well. Now, here is an example of a failed idea. But the interesting thing is, and actually I even detailed this. Let's see if I can load this up. Where are you? That's interesting. I thought I did. There it is. So, when you trade the options market, you have to understand that the profits can be very large. But at the same time, too, they're options, so you have to understand that there's actually a very high probability that they could expire worthless. It's a high probability. So I don't expect to win on all my options trades, right? My sort of thinking is I want to be right a good 66% of the time. If I can get up into that area, then I'll make more money than I ever need. Here's an example where if I had bought $100 of each of these trade ideas and one works and one doesn't, well, you can see I booked 47% return on this trade, and here I might take 100% loss. So if I put $200 totally into two ideas, I'm right 50% of the time. At the end of the day, my account balance technically is 347%, or I took away $330 from this. So in essence, that's like more than 50% return on my money. But that's sort of how I approach risk management, is try and balance it out. And of course, when you're right, you better make damn sure you get paid. But also, too, what I would say is this whole TRISOF principle is I'm going to go buy an option here, and I've bought out into the spring. Kind of like you see how it took some time for this thing to get going. I don't know if this is the bottom. It might be. It might not be. This might be like a classic stock market FU, and the damn thing turns around and then heads back up. We've seen that lots. Point here is that this range is so huge that if I go and buy like 6 months at a time, what's the statistical odds that I can get some sort of bounce up into this area over this window? So right now I'm looking like an idiot on this, Kirk. But at the same time, it's not that big of a deal to me, because I threw like $150, something like that at this thing. And if it works, then I'll take, $300-$400 if I can out of this thing. And I'll even sell half on a double, just 2/3 of the position on a double, just to get my original money back, and then we'll let it breathe. And I just thought this was just a really good anecdote of what I would consider a trader's life's all about. When you're never going to be right 100% of the time. Get used to that. Don't trade options like it's just one trade. Try and have a balance, a mix, a portfolio. And when names perform, make damn sure that you get paid when they perform relative to, and we're going to assume here that this is 100% loss, but it'll be a fun experiment for us to do going forward, just to keep an eye on this. And somebody remind me when we get into March, April, May, just to take a look at this again. Of course, if it does turn around and head back up, Brian, I'll be squawking about it at length. But let's just see how this trade ultimately develops. But really, I don't find out whether this trade actually works or not until easily the middle of May. So it is an interesting anecdote of a trader's life. Heading back to crypto, of course, Fridays we have on site member. He's actually a member of another trading group and an analyst at another site. He is a TRI veteran, and he passed his final level 3 exam, so got his veteran tag. Way to go, Colin. You now are a derivatives aficionado. But anyway, on Fridays, we sort of made him a regular contributor on the TRI Daily Brief offering. So Colin gave us a good half hour, 45 minutes presentation of what he's seeing in crypto. The message that I've sort of given of late is, we are now finally getting down into areas where at the very least we can tell little old ladies that we know that, okay, it's okay to come into the market and start nibbling away, reload. You're not allowed to buy unless we're at or below reload zones, all that kind of conversation. So that's encouraging. There still is a lot of unfinished business down here. And I certainly can't say that Bitcoin is a buy. Oh my God, pound the table, you got to buy the damn thing. I mean, we know, if you watch any of my broadcasts of late, we've talked about this ad nausea off these weekly charts. There isn't any signs of bottoms here yet. There's lots of room for some back and forth. These short-term moving averages are a long, long way. Bitcoin right now, its short-term moving average on the weeklies is sitting at 8,400 area. So, we could easily rally, like the better part of $1,000 here. But does that mean it's trending higher? No. I am starting to see little anecdotal signs of what we like to see, and that is this concept called divergence out of our price momentum indicators. But, if we look at things like timing tools for momentum, things like RSI studies, they're still making lower highs and lower lows. So it's not like, oh my God, you got to go and buy your Bitcoins now. And if anything, the fact that it just made a new recent low means, okay, at the very least, we got to see that low tested, put in a W, kind of like what we saw last winter, and then turn higher, and then we know that we're back into a bull. So for the time being, it's kind of like trading range kind of conversations. We had some really fun conversations through the daily brief about AB equals CD levels off of lower time frame charts getting traded to. But I don't think we can make any really grand conclusions until we actually start breaking out through this sort of 78, 7,900. This is off like a 4-hour chart now, to potentially set up these bigger moves up into like 8,400. Notice how that bot target, 8,400, is the same as that weekly moving average. And notice too that off of this range, that's 38.2 to 50% of that range. So you can see that bounces up into this area are not out of the question whatsoever. The only concern that I have right now is that Bitcoin hasn't technically bottomed yet. Right? We don't have those W's that we really want to see actually tell us that there's some sort of floor in here. So as a result, we're still sort of playing around in this very wide trading range. And it looks dangerous, and it's been dangerous. Like the dead cat bounce move off the bottom painted things like inverted head and shoulders, and then those turned into head and shoulders tops. And we're good at this trading range. Big FU candle, run a lot of stops, then big slam down against the lows. Choppy, 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 then nice and sideways, heading into the non-farm payroll numbers. And then, like I sort of said earlier, we had a short-term bullish setup that sort of projected up into this wick. And I think I was showing through the daily brief, this chart. That it kind of looked to me last night that, if there was going to be a rally, where are they likely to put the fire out? Reload zones, 78.6s, original market structure top, and then, if they were going to try and put a bottom in the market, if it dumped, where was support, reload zones off higher time frames, old key lows. And so really I was kind of thinking that there's our big ass trading range. And sure enough, that lower time frame 15-minute push, boom, up into those levels, and somebody just knocked her right back down. This is a tough trading market, people. No doubt about it. The people that do really well in this kind of trading environment are the mountain mans of the world. All right, guys that just sort of trade levels. They don't really, think too much. The level came in, just hit the damn level. I'm a range trader kind of guy. That's what I do. And that's kind of what I'm thinking this kind of market state is right now. The interesting thing is, as you can see, we did have potential bearish trend continuation setups forming. Never came in. Non-farm payrolls came out, risk on, market pops the top. So these bearish setups, they're gone now. You can see I had alerts and everything set up so that had that come in, I would have taken that trade. And, as long as we're stuck in this trading range, unfortunately, ironically enough, I kind of want to, and I know it sounds like a broken record, but I want to try and be a demonstrator of best practices, at least for the people on the site. So I had said that for this buy bid competition that I was going to trade the bot setup. So I built a trading plan to show the bot setup, blah, 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 blah. So in this kind of ranging market state, there's not a hell of a lot for me to do. So I took on a couple. I was hoping for trend continuation out of this range. Didn't come in, got out. I was hoping for trend continuation on this dump. I fucked the trade up. So way to go, Brian. You're kicking butt. But at least I just report exactly what I'm doing. And at the very least, like I said, I want to be at least consistent for site members and anybody who's watching on YouTube or anything. So, okay, well, I think we'll leave it at that. I talked probably way too much here today, as always. The only other thing I'd probably suggest is it's kind of a fun market. Colin, of course, is extremely crypto-oriented, which is good, and I love it. And if that's the air asset of preference, rock it. And so he's constantly searching for ideas, and this little one popped up this morning. Contentos trades on Binance. If I'm not mistaken, it's not open to U.S. customers, so this is probably just an international name. Hopefully everybody can see the W within the W and then this cute little reversal bar. And really the way I kind of look at a name like this is you can see this one candle, this doji, that really sort of defines the range. You can see you can sneak in off of this thing at that level right now and maybe just risk to a break of these levels down in here. You can see the internals are looking pretty strong. And this is what I sort of mean by a coin picker's market here. This guy's telling you that there might be an opportunity for some fun here. Do your own due diligence. I haven't got the slightest idea what these guys do or what their fundamentals look like. It's just an interesting chart, and this is the kind of content that our members like to share. And like Colin's part of our crew now on Fridays. And he's just, what we need is ideas. Give us ideas, stuff to chew on. And here's an excellent example of that. Staring you right in the face. So, okay, everybody, I think I'll leave the presentation at that. Sure hope you got some value out of all that. Have yourselves a great day. I guess I'll see you for broiler chickens on the weekend. All the best, and bye for now.